Insurance exam prep key departments in insurance companies. Question 1. Which department determines the risk level of an applicant? Actuarial, underwriting, claims, marketing. The Underwriting Department assesses risk, decides on insurability, and assigns the appropriate premium classification. Question 2. The primary responsibility of the Actuarial Department is to sell policies, settle claims, calculate rates and reserves, audit agents. Actuaries use statistical data to determine mortality/morbidity rates and calculate the necessary premium rates and reserves. Question 3. Which department investigates and settles policyholder losses? Underwriting, claims, legal, accounting. The Claims, or Loss, Department processes, investigates, and pays out legitimate claims to insureds. Question 4. The process of evaluating a risk to see if it meets company guidelines is actuarial science, underwriting, marketing, adjusting. Underwriting is the systematic evaluation of risk to accept, reject, or appropriately price the coverage. Question 5. Who is considered the field underwriter? The actuary, the claims adjuster, the agent, the medical examiner. The agent is the field underwriter because they gather initial information and observe the applicant firsthand. Question 6. Which department creates the advertisements and sales materials? Underwriting, legal, marketing/sales, actuarial. The Marketing and Sales Department develops promotional materials and supports the agency force. Question 7. The department responsible for ensuring company practices comply with state laws is compliance/legal, underwriting, marketing, actuarial. The compliance and legal departments ensure policies, forms, and practices adhere to state and federal regulations. Question 8. Adverse selection is a primary concern for which department? Underwriting, marketing, claims, accounting. Underwriters work to avoid adverse selection, which is the tendency of higher risk individuals to seek insurance. Question 9. Which department manages the premiums collected and issues dividend payments? Claims, actuarial, accounting/finance, underwriting. The Accounting and Finance Department manages cash flow, investments, and premium/dividend accounting. Question 10. The Medical Information Bureau, MIB, is heavily utilized by marketing, claims, underwriting, actuarial. Underwriters use the MIB to check for medical history inconsistencies reported on previous insurance applications. Question 11. Reinsurance is typically managed by executives in coordination with the actuarial and underwriting departments, marketing department, claims adjusters, sales agents. Actuarial and underwriting teams determine when risk needs to be transferred to reinsurers to protect company solvency. Question 12. An underwriter assigning a substandard rating will result in a rejected application, a lower premium, a higher premium, a voided policy. Substandard risks are accepted but charged a higher premium due to increased risk factors. Question 13. Which role physically inspects property or investigates claims on site? Actuary, claims adjuster, underwriter, sales agent. Claims adjusters investigate losses in the field to determine the extent of damage and insurer liability. Question 14. Which department oversees the continuing education and licensing of its agents? Agency/producer compliance, claims, actuarial, underwriting. Agency operations or producer compliance tracking ensures all selling agents maintain valid licenses and appointments. Question 15. When a claim is denied, Which department defends the insurer if sued? Legal, underwriting, marketing, actuarial. The legal department handles litigation, defends the insurer in lawsuits, and reviews contract wording. Question 16. Underwriters primarily base life insurance decisions on credit scores, age, health, and lifestyle, geographic location, race and religion. Life underwriting heavily relies on age, medical history, occupation, and lifestyle habits. Question 17. Which document is requested by underwriters to get details from a doctor? MIB report, attending physician's statement, APS, consumer report, agent's report. An APS is requested from the applicant's doctor to clarify specific medical conditions for underwriting. Question 18. A claims adjuster acting in bad faith can result in a promotion, punitive damages against the insurer, lower premiums, and underwriting audit. Unfair claims settlement practices, bad faith, can lead to regulatory fines and severe punitive damages. Question 19. Which department works to invest the insurer's reserve funds? Finance/investment, underwriting, claims, marketing. The Finance and Investment Department manages the large pool of reserve funds to generate safe returns. Question 20. The mortality table is the primary tool used by the underwriter, agent, actuary, adjuster. Actuaries use mortality tables to predict the expected rate of death in a given population to price life insurance.